Greetings, Dr. Jeffrey Scott here. This is my weekend market update for the week that ends with Sunday, May 5th, 2024. My email address is hgsidoc@gmail.com. If you're new to my channel, please hit the subscribe button and you'll hit the alarm. You'll also get notification when I post these. I do these for fun. I don't really have an education business, but I love teaching people how to trade. I'll talk about some live training I do, and yes, I have some indicators, but this is my passion, not my income. My income comes from trading and from my day job in healthcare technology. I titled this week From Support to Resistance, Can Markets Break Through? And that's a question mark for a reason because I do think we're at a pivotal point, and I'll show you as we go on. This picture is basically outside the window from sundown last night of where I'm staying in the western part of Costa Rica at one of my best buddies' weddings. I pick on him in my call and a lot of these videos because he cracks me up because I've learned to be a contrarian. He goes long, I go short, and he knows who I'm talking about. But he's a great guy, and I wish him and his lovely bride only positive things. But it is a beautiful country, Costa Rica. And imagine a country that has no military. Never heard of that before. I read that on my way in. That sort of blew me away. Disclaimer, this for education purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. I am a doctor, not a broker. I'm independent. I've paid for the tools that I use, and nobody pays me to say good or bad things about their stuff. Trading involves risk. You are solely responsible for any investment decisions you make. That's me, I guess without facial hair and a few years ago. I'll be speaking in July in, as you can see, 71 days at the Wealth 365 event. I don't ask for much, but if you do me a great favor, click on the link for this in the remarks on the YouTube video, or if you get an email from me in the email, and just register. It's non-binding. You show up, don't show up, just sign up, and so that I can show that I can bring some people, so they'll keep letting me speak there. But really look forward to the event. It's always great. That's how I started with Rob Hoffman in this community, although I've known Rob for a long time. Um, but I was a user of wealth charts, and my indicators were created for me in wealth charts, then a scanner, and then Rob asked me to start participating in the Wealth 365s, which was completing a circle because that's where I started with this. If you like these videos and you want something more frequently, I try to post as often as I can at stocksanddocs.com. And those videos are snippets. They're about 5 to 10 minutes, and I do them again when I'm not traveling most days. I don't do a lot of live events, but I have 2 seminars a year I try to do. This is the first one. It is June 6th through 9th in in Tustin, California, in Orange County. This is designed to be a low-cost meeting. For those that attend live, it'll be $300, and we only accept 20 people live. It's a smaller room. And then for those that want to do it online, it's $400. Now, you might be scratching your head and say, that's bizarre. Why do we charge more for online? Well, it's a low price if you compare it to anybody else in the market. And we gave the discount to the ones that come live because, hey, they got to pay for hotels and airfare like I do. So 20 people live, we're filling up. Those are some of my friends that will be presenting. Dave McMullen, who I've learned so much for, just a great trader, as is Dev Kashav, and then Chris White, who has Edge Raider. I hope to have announced a special guest star named John Person before too long. He will not be live. No expectation of that. He won't be in the room, but I'm hoping that he'll zoom in on Friday or Saturday if his time allows. Our schedule will meet and greet on Thursday. Program is Friday and Saturday, and Sunday we have breakfast and talk stocks at Dave Larson's house, which is around the corner from where we'll be. So that's who to meet. Stop the video here. You can write it down, Greg Mills or David Larson. Um, Another reason why this meeting is low cost, it's really paying our respect to George Lee, who used to run this meeting. And George was all about making it accessible and lower cost. And we want to, maintain that and respect that. And he was such a great friend and a great trader. I always look at the markets first. So I've ranked these a little different this time. It's 5-day movement. And natural gas, which has been pretty dead, actually has had a big move, but it's still down a lot from the beginning of the year and over 50% off its highs. NASDAQ biotech, which has been dead, was before this week was down almost 11% from the beginning of the year, is now up 5% on the week. That is interesting to me. ARC Innovation, small cap growth, another laggard you could see down a lot on the year, was up 3% on the week. The Russell turned positive now on the year um, after having a strong finish on Friday and a strong week up 1.8. So, it was an interesting week. If I just look at how I feel about the markets on Thursday and Friday, it's a wow, what a great market, such a big move. Everything was up, felt great. But if you look at the weekly performance and you look at the 1 day versus 5 day, most of the gain on the Russell occurred on Friday. The NASDAQ was negative until Friday. The Dow was flat till Friday. Again, the Nasdaq negative to Friday. The S&P 500 was negative to Friday, as was the NYSE. So we had a major turnaround. We'll talk about that. And the question is going to be, is are we done going down? Was this recovery overdone? Is it near complete? And I'm going to try and answer these as we go forward today. We can look at the S&P sectors and we could see over the 5 days, utilities led. It actually was decent on Friday, up 0.8 as well. The leaders on Friday, technology, um, materials were up, but technology leading was sort of a turnaround from earlier in the week. Hi. All right. Sorry about that. They're cleaning my pool outside my my little honeymoon suite at the hotel where the wedding is. No, it's not my honeymoon. I've been married 39 years, but why not? Um, Again, looking back here at the market, so materials up 1% on Friday, communications and technology, which is sort of a reversal from the beginning of the week where utilities really were leading. This shows strength. On Friday, this is the S&P 1500. 100% of the sectors were up, 79% of the industry groups and 73% of the stocks were up. So if you were long the market, you made money. I'll talk more about the buckets later, but the picture has totally changed to where we have almost nobody below their Bollinger Bands in the S&P 1500, and we're starting to accumulate stocks above. Nothing serious, nothing concerning yet. This looks at the sectors, industry groups, and stocks over 5 different time frames. And you can see if we look at the past month, it's decidedly bearish with most sectors, industry groups, and stocks down. Over the last 2 weeks, we turned around, and boy, over the last couple of days, we've gotten really strong. So that would be one sign of momentum, and that might be one thing for the bulls to hold their hat on that says we're going to go higher. If we look at the Q breadth tools, now I love this tool set. It's in Metastock. It requires a subscription to Metastock. It's actually powered by end of day data, at least these parts of the tools. And it requires a purchase of the Q market breadth tools. But it shows me so much. Down here shows me big moves in the markets. And you could see that on Tuesday, we had 4 of the 6 markets that we follow have big distribution days. That's not a sign of a bull market. Now, was that the baby out with the bathwater? Now the markets go higher? It's possible. But that was one thing that is still going to temper my concerns right here. The second thing is if you look at up here, stocks above the 50 in white, excuse me, 200 in white, and the above the 50 in orange are both trending higher, and 50 above the 200 is trending higher. That's great. And if you look at breadth, AD lines, up down volumes, and new highs, new lows, they're all tracking the way we want them to track. So a lot of positive things here. These magenta here and these blue things are Hindenburg omens. When they're both, when it's the blue color, it means you had a Bango and a Hindenburg omen together. A Bango, which is the arrows or that, I don't know what you want to call that color, is sort of exuberance to the upside day. The Hindenburg omen is a signal of impending market sell-off. And you could see we got our sell-off. Now, it wasn't a deep sell-off if we're done going down. We still do not have higher highs, although we're starting to work upon higher lows. So we'll see if we can retake and turn this market higher. Still, to me, there's question. If, now, this is called the total view. That includes a combination of the NASDAQ and the NYSE composites. Now, if we break them out here, you could see that most of the Hindenburg omens, the danger signals, were on the NASDAQ, and most of the Bangos, the exuberance, were on the NYSE, and both are running into this yellow dot dash 50-day moving average. I think that's going to be the theme of this presentation is the fact that we're running into the 50-day moving average. Okay, if we look at the major indices, you can see them up against the top. Look at this. Every one of them, the Dow Jones Industrials, the Russell broke through and closed below. The Nasdaq's just below. The S&P 1500 is right on it, as is the S&P 500. So, you want to prove to me that the markets are working? Then let's break above that yellow line. Let's retest it and go higher. You want to prove to me that it's not working? Let's break down here. I think that is a pivotal question and one that the markets are going to have to answer probably this week. This is the Nick Drendel spreadsheet. I love it because it shows me so much information, such as close of the markets here, the ones that are followed by him. Um, Small caps did not close in the high of their day, while some of the larger caps did. It was a good day for mega caps, no question about it. If you look over here, what led? Well, garbage. Not that solar's garbage, but solar's been way underperforming this year. Semiconductors did have a great session. Crypto. And then here's that biotech again. Biotech looks, with a 7.8% gain on the week. You wonder if it's starting to turn itself around. And then cannabis, we talked about last week. I'm not sure if it was on the weekend or Monday, Tuesday. There was some positive um, legislation suggesting that perhaps it's going to get less criminalized, and I think that caused a pop in that market. Strong day. Look at this. The only losers were gold miners and cybersecurity. That's now, what happened on the week? Rates fell. You could see that 3.62% drop in the 10-year, 2.5% drop in the 30-year, and so the stock market in white, excuse me, the stock market in yellow turned up while the rates in white turned down on both the 10 and the 30. Is there a recession in our near future? Well, 10 minus 2 in the upper left, 10 minus 3 in the upper right. I like to watch these. The black line is the inversion line. The gray bars represent recession, and you see a recession when you come back above the zero line. Although we've crept closer and closer, we are nowhere close to being above the zero line on the 10 minus 2 nor the 10 minus 3. Other things that might scare me, credit tightness. Well, this is a measure of credit tightness. Now, you get the biggest credit tightness inside a recession, but we're not even moving up. And then over here, remember the gray bars are the recession. This is a measurement of economic activity. And although we've had some mixed data on the economic activity, you could see we are well above the black line, and recessions start from when we're below minus 20. So my answer is maybe someday, not tomorrow, no time soon. Bad breath as we eased off the highs? Well, not necessarily. I forgot to change this slide. Sorry about that. It's better breath as we move off the lows. So that one got through me. If you look at stocks above the 200 days, stocks above the 40 days, both improved, and they're not overheated. This is the shortest acting one. This is the 13-week new high, new low, and the market sort of reversed here on the 17th. So even though the week started kind of weak, um, it actually has shown short-term more new highs than new lows if we look at a 13-week period. You could see here that it got almost down to zero. This was a daily on 417. Like clockwork, when we get up near the highs, the market goes down. When we get up near the low of this chart, the market goes higher. It didn't let me down this time either. AD lines, you can see the massive divergence between the NASDAQ composite in blue and its AD line in yellow, both turned up this week. I'd love to see those start to go in lockstep again. And boy, what I'd love to see is the AD lines leading the price, because that will give us a great clue of higher markets. The buckets take all the stocks in the S&P 1500. Look at what their percent B is. If it's in the first 10%, they're in the first bucket. If it's between zero point 0.1 and zero point 0.2, second 10%, it's in the 20% bucket. And then just by looking at where all the stocks fall within their Bollinger Bands, you get a sense of how the market's doing. 61% of the stocks are above the midline. That is bullish, but not excessive. That's a good thing. And then if I look at where the buckets are, a couple weeks ago, we were at 30% or 20% below the Bollinger Bands. Right now we have about 9% above. That's a good market, nothing to be concerned about. Hindenburg omens occur at market tops, and it's, to me, it's basically the math around the pros selling in massive volume, and thus the small guys buying. And typically, the smart money is the one that's selling, and the markets go lower. And you could see the Hindenburg, last one was April 5th on the NASDAQ. Remember I said the 17th is when it bottomed, and the 5th on the NYSE. So I'm almost ready to say we're in a Hindi free. And now I'm going to watch the new lows and the new highs, and we're picking up new highs with less than new lows. Put that one in the bullish camp. If I look at this report, which takes all the stocks that are above 2.5%, actually, I'm going to pause and rerun this real quickly. Okay, I'm back. So I just want to tell you what I just did here. So this is called the warehouse report, and it's in one of my favorite programs called Edge Rater. Chris White, the proprietor of this, will be one of the guys speaking at the Orange County meeting. Of course, since he's English and lives in England, I expect him to be zooming in, but maybe he'll surprise us. What this does is it takes every stock, and what I did wrong was I only looked at the S&P 1500 in the prior chart. I'm looking at every stock over $2.5 and 250,000 shares traded per day, and I'm asking the question, how did it perform? This is percent gain based upon ERG. ERG is earnings per share, relative strength, and group. And when you see this pattern, and we throw out the tail and the head, because this gray thing here tells you there's very few stocks when you get to the last 3 data points on both sides. But what you see is a chart that almost everything is above zero, and it's better for the low ERG. So that tells me a junk off the bottom reversal rally. Earnings per share, you did better on the week with lower earnings, although it was pretty flat. But look at this, relative strength. The stocks with no relative strength actually outperformed on the week. So that's kind of interesting, and that is meaningful to me. And then the best groups were the groups that were E the prior week, because I'm using the fundamentals of a week earlier. And so the worst groups the prior week are the ones that outperform. So this is definitely what I refer to as a junk off the bottom rally session. That's why I had to redo that, because I noticed when I looked at this that we were too flat for the week we had. All right, know your news and earnings dates. This is something that maybe should worry me for this coming week. All these red lines on the left are the confirmed Fed head speaking events. Here's my hypothesis. Powell did not mean to set off another bull market. Again, this is my hypothesis. He may not have meant for his comments to say everything's all clear and jump back into the market. He certainly did not say the rates were coming down. All I heard him say was he's not going to raise rates. There, he doesn't see the reason to raise rates anytime soon, and they might be reducing some of the quantitative tightening. Now you've got 10 different attempts by Fed speakers. And what happens if they try and talk down that narrative? The market's going to reverse. So I think those are important. We got some jobless claims, we got some consumer sentiment, and what we really have on the week is we have a ton of earnings. So we're still in my earnings Lollapalooza time, and there's some big companies, and I'm sure hoping for my mini me at work, whose wedding I'm at, that a firm blows it out of the park because I think that's what he's planning on paying for the wedding with. And I'm only partially kidding. One that looked interesting in the chart, and it's like coming out of the death throes of destruction, is Beyond Meat. It's not certainly a leader, but it's starting to show some life, and it's got earnings out, so I might be watching that as well. Why is this chart important? Because we all own stocks, and there's a lot of stocks on this list, and it's a judgment call to hold your stocks over earnings date. It is bad judgment to not know when your stock's earnings date is scheduled. So markets exhibited somewhat mixed actions this week amid a slate of earnings news and market-moving economic releases. Ultimately, the indices settled with gains. Russell turned positive because of this week's gains. Mega caps outperformed. Look at the equal weight S&P is only up zero point 0.2. As I said, Fed Powell calmed some market participant fears. They left rates the same. I'm not real excited to have all these Fed heads speaking. I doubt they're talking the market up. That's just my prediction. Major indices have risen up to the 50-day SMA, which is a natural place to expect resistance. And I'm going to show you that both the 10-year and the US dollar are acting like they're ready to go higher. Those are, you're not going to get higher dollar and 10-year and higher stocks. So to me, we are at an interesting juncture. It would not surprise to see the markets break higher here, but I'm still cautious as my weekly timing model has not moved to buy, and we still have lots of earnings and Fed speakers who may try and adjust our thinking. I did cover much of my shorts. I had a lot of shorts on Tuesday, and Wednesday before the Fed, I took off much, but not all of them, and it was a good thing because the market did have a pretty strong rally. This is a slide I showed a while ago. It comes from the Bank of America Global Research. The blue lines represent market bottoms. The thick black line represents Fed rates. Do you notice that you don't have market bottoms until the rates start to come down? The Fed has not cut rates. Why would we expect that we've seen a bottom in the market? So, Ian, probably the biggest influence on my trading career, life, and success, used to say, Jeffrey, approach everything in life with a three-road scenario: your work and your markets. So here's my three-road scenario for this coming week. We are in a downtrend. You can't see it real well. You'll see it in the live charts, but the close was right here at the 50. We are still in a downtrend. Do we break higher, which is scenario one, new highs, the big bull scenario, rah, 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 rah? It's certainly possible. Um, Here is two. We fail at the 50 and we're going to go get to a lower low than at least this intermediate. And maybe our target should be this white line, which is the Fibonacci. I think that's the 38.2. So do we break lower or do we just go sideways? I don't think we're going to go sideways here. I think the fact we nudged up against the 50 is tells me that that's a big we're at a big inflection point, either higher or lower. Now, if we break above it, you'll get a chance to buy it when it pulls back and tests the 50. If we break below, you'll have a chance to short it again when it retraces into the 50. But you got to be nimble here, and I think that's what this picture is all about. So again, if you like these discussions, now we're going to go jump into the programs. I would love to have you sign up for the Wealth 365 event, and again, I'll have the link set up for you. All right, this is Wealth Charts, and we're going to use this for the rest of the program. I'm halfway. All right, so let's look at the week we just went through. So Monday, we gapped up from a weak close on Friday. The white line represents the prior week close. Traded relatively flat on Monday. Tuesday, we sold off as there was some hot economic data. Wednesday, we continued that sell off. And then this was the Fed. Now, we kind of had a round trip where I'm sure a lot of people got whipsawed and we came back down. But at the close and then the open Thursday, after a little bit of a dip down, we continued higher. And then Friday, the market further digested as they did Thursday. Fed's had Powell's comments, and we ran up and closed at the high of the week or just off the high, and you could see the delta between where the week opened and where it closed. So a strong week, and I always like to look at the S&P 500 for that. As I've alluded to, there's the little candle right there up in the 50. If you look at the Qs at the 50, if you look at the diamonds at the 50, if you look at the Russell, it closed at the 50. So do you think that 50 matters? A break above that 50 is going to be incredibly important. You'd expect the VIX to have done well on the week, and it actually to be done poorly on the week because of the strong markets, and the VIX was down 10%. Here is the dollar, and the dollar could certainly break below this channel, and a break in the dollar would be brilliant for the market if you're bullish. But that's a green candle low. That occurs when you got the lowest close going back to here, about 20 bars, and you have the lowest, well, you traded lower and closed higher, giving you a green candle. That's a reversal candle. Would not surprise me to see the dollar go up from here. That would be bad for the markets. Commodities. Dollar rebounded. Interestingly, gold's been selling off even with the dollar pulling back because we've had such strength in the dollar. Silver, the same thing. And I also think gold and silver like rate cuts, and higher for longer is probably not good for the metals. Oil has come down as well. Natural gas, big gain. Really, it took out the 50, but it's still pretty much a bottom fishing play. So why did I say that 10 years are rebounding? Well, I'm not saying it rebounded. It's in the middle of its uptrend here, but it has a big bottoming tail, and that's typically a reversal candle as well. So it's something to watch. The weekly timing model is what really controls the directions of my trades. I require two things to be a buy. I mean price over the WMA, and I need the weekly bongo to be a green. This is when it turned into a buy. This is the spiders. It will stay into a buy until both of those features are not met at the same time. Well, we're still above the WMA, so we're still in a buy. Now the others all dropped below the WMA and all flipped to red on their bongos, and now their prices are above the WMA. So I put caution signs to let me know every day that, and every week, that we are potentially close to a reversal here. But right now, the markets have three down and one up, and a lot of mixed signals here. The daily market timing model is a whipsaw model because it's so fast. And this one has gone to a buy on all the indexes. Of course it went to a buy. You saw how strong the market was on Thursday and Friday. This is a whipsaw one. This is good for short-term trading, gives you a sense of the direction of the market. But I really rely upon that weekly. So despite the big move that we've had, we did not flip the weekly bongos. Could happen this coming week. Breadth, I look at things like RSP versus SPY, the equal weight spiders versus the spiders. The thing on the bottom is leading when I'm pointing to the low, so the spiders are leading. The equal weight Qs versus the Qs, well, the Qs are leading. The Qs versus the Russell, well, the Qs are leading. The IBD 50 on top versus the fangs are leading. So you could see this is a market led by the big caps once again, and not as broad as we like it to be. The sectors daily looks at ratio charts comparing the S&P 500 on the bottom versus the various sectors. Strength would be defined as pointing and being closest to the upper right-hand corner. Well, obviously the greatest strength is utilities right now, which not great for a bullish tone. Other things that make me excited is when I see a long blue line here, and this tells me that even though biotech, because this is LABU, has been weak, it's showing some short-term strength. The same way that financials to the opposite are showing me some short-term weakness. Now, when I look at this, I see that technology had that blue line. I can see discretionary came off the bottom, but really the only thing that's really making me excited here are utilities, and probably not the place that a growth stock investor like myself likes to play. Now I want to go into my scanners and I want to take a look at the markets. We're starting here with a heat map. Now the heat map in well charts doesn't finish until I think like 7 o'clock. So it includes the after hours trading. Not much occurred on Friday. But what the heat map shows me is that it was mostly a bullish day. Well, we know that. It was a strong day in the market. Apple, this is the problem with the heat map. Not the problem. This is the problem if you don't understand the heat map and wealth charts. It's very red. It shows it was down 2.23%. Yet if you look at the candlestick, you can see it was up 5.98. Well, the story there is simple. It was up 9% after hours on Thursday. So compared to the 7 o'clock data p.m. on Thursday and the 7 o'clock data on Friday, it was down, although it was a really strong day. So a strong day for the S&P 500. And if I look at the Russell 2000, you can see a lot of strength in the small caps as well. Wealth Scanner, for those that are new, this is a tool that will rank for me and show me where strength is. So I put a basket together of sectors, industry groups, themes, stories of different types of stocks, and then I like to see which ones are moving. Now, what you wouldn't know if your first time here is that the top score is 850, and in a strong market, the whole list will be above 800 on this sheet. There's hundreds of things here, so they won't all be above 800. The arrow tells me it's getting stronger. The flames tell me it had a big move. Uranium is at the top, and I know that CCJ and I think UUUU looked interesting. Then we have Singapore and China, 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 and there's utility. So think about typical growth stock industry groups. Where is semiconductors? Where are well, we know they did bad this week. Cybersecurity, um, software stocks, they're not sitting up at the top, and that worries me a little bit about this market. In fact, when I see the foreign markets are stronger and then we're led by utilities, it makes me nervous. So I'm going to put that in the bearish camp of a reason to be concerned. But let me be very clear. I am neither bullish nor bearish here. I am in wait and see mode to see what we do at that 50-day moving average. What has been support in the past can turn into resistance. And if we break through resistance, it turns into support. Ian used to call that 50-day moving average free parking for a reason. It is a place that growth stocks like to return to, and all good stocks do on a regular basis in uptrends or downtrends. So it could be retracing to the downs in a downtrend or pulling back in an uptrend. So we're going to see if we flip. So I don't see anything here that jumps up and says there's one sector besides utilities that you need to be buying. So my tool for sifting through the market is called the CAT scanner. And so what I have done is I've traded for a long time. I'll just start with that. And that I found that most great moves occur with certain patterns. And so I created an indicator. I'm boring. I call it dots. There's four potential dots. One dot is for gap, another dot is for volume, another dot's for breakout, another dot is momentum. I'm hard pressed to find any great leaders that didn't start with some combination of that. I include in my scan my trending tools so I can find pullbacks and uptrends or retracements and downtrends. And I also like to look at relative strength versus the spider and on balance volume. And then I do like the squeeze because that often finds things that are getting ready to have a big move. So the scanner is set here for pullbacks and uptrends. So I'm going to look for stocks over $5 and 500,000 shares. Let's lower it to 250. I'm going to look for at least one for options liquidity, which means I like stocks that have options, at least one bullish dot, no bearish dots, and I'm looking for a reversal in the bongo within the last 9 days, which means it had to go from a downtrend to an uptrend. Why? Because I don't want stocks that have run too far and are um, extended. And so then I want both my bongos to be bullish, hit apply changes. So I have three utilities made the list. Now these are stocks that are reversing higher. So this is one that's had a big move on Friday. This is ALLETE Inc. ALE is the ticker. I know nothing about it. I'm not recommending it. I am interested in why a stock has volume like that. This is the triangle is a really strong indicator from Rob. It's called the launch indicator. The circle is the wealth signal. The triangle is the EMS. So here's a stock that has all of those have recently fired, massive volume. I don't see any news, and it looks like earnings have not hit yet. Um, so I'd have to do more research on that. NEP, Nextera. I don't like the fact that it's below the 200, but I know this one very well. And look at what's been happening over the last week and a half or 2 weeks. Lots of volume, only green dots. Um, Relative strength and OB have had a move. Now, the high-low jump is my in extended trends measurement of extended stocks. This is not an extended trend, it's a flat stock. Interesting move, pays a dividend. I'm not a big utility guy, so I'm just pointing these out. And then this is one that really had a big move. This is Brookfield Renewable Partnership, BEP. Again, same story, massive volume. There it is. 4-dot move, gaps, volume, breakout, momentum, relative strength and OBV look good. I ignore high-low jump when I'm sitting right on the 200. And this thing here said it had earnings, and was it lost 23 versus expected 17 cents, a 35% miss, yet the stock broke out and traded higher. They probably said something about future revenue growth. Don't know anything about it, but I do like the fact it broke above the 200. And this comment about support and resistance, um, look how many times this thing has played around with that 200-day moving average and how it knifed through. Is this a leading stock that I'm going to go out and buy? No. It's just, it's a utility that has an interesting pattern. This is how I look at the market. Now, I like to buy high relative strength stocks. So I'm going to see, and I have a list I put out. It'll be down under a combo list. You'll have the high relative strength list for wealth charts users. But let me find that. This is 100 stocks, and they have great fundamentals, great growth, great relative strength, and there it is. Let's see if any of them are at buy signals. Come on. Whoa, look at that. A lot of them are. ACA, Arcosa, don't know anything about this. Nice reversal here on good volume. 4 dots, had earnings, had a 40% beat on earnings. I did not have this on my list, but this might be one that's worth taking a look at. 4 dots closing near the high, taking out the 50, not extended, great relative strength in OBV, so I'm going to put that there. Digital Realty is a REIT, don't like where it closed, so I'm going to skip that. Motorola Solutions is kind of a stock that in a strong market I love. Big uptrend, pullback. This candle here is a clear reversal hammer. And then a gap up on Friday. And guess what it had there? Earnings. It had an 11% beat on earnings. So the green thing is earnings. And on the purple, raised to 405 by JP Morgan. That's a big one. and Barclays to 372, and the stock is trading at 350. So you've got a nice uptrend, big pullback, major move on earnings. Earnings are now behind it. That looks interesting. Reinsurance Group of America. Again, you're going to see the same pattern that I like, which is an uptrend. Now, this was sort of a double pullback, but look what happened, and I bet there's earnings beneath it. 32% beat on earnings, four dots, um, getting extended. This one I'm going to say is getting extended. It's getting pretty far from the 200. Relative strength and OBV are strong. So notice that my scan is pulling up stocks that are moving. The requirement for that reversal in the bongo means that they had to do this little pullback because you see the bongo, which is my trend indicator, showed a downtrend that reversed. Um, Select medical holdings must be an earnings play as well. 35% beat on earnings. Uptrend, pullback, strong breakout on earnings. Notice how the wealth signal came in several days earlier. I'm less worried about the extension here than I was on the last one. Look at relative strength and OBV as well. So all I've done here is created a tool that brings the best stocks in the market up to the top. I mean, markets are risky. Markets have good days, bad days. You got to know what the market's doing. But if you want to fish for what's working, why not fish with a tool that brings them right up to the top? SPX technology, great uptrend, pullback, breakout, and we know what's underneath there is earnings. 20% beat on earnings. In my experience as trading for over 30 years, short-term moves are markets, it's what competitors announce, it's news driven, it's an earnings beat, but long-term moves are it's earnings, earnings, earnings that power the long-term value of a stock. Tidewater, this is an oil services stock, um, had earnings come out. Nice uptrend. You've seen I've looked at it before. I like breaking out of flags. You had another flag here. Big run up here. It's getting away from that 200, but what a beautiful move. Closed at the high, massive volume, four dots, and of course it beat earnings by 43.5%. Let me just go through the list and see others that made it to my high interest list. Camden Property Trust, I think it pays a 3.5 or 4%. It failed at this point back here, but it just broke and closed at a recent high, going back all the way until here, which would have been back in September of 2023. Again, I'm ignoring the high low because it's sitting right close to the 200. All the different moving averages have come together. Massive volume, and it beat by 2%. Camden Trust. Just going down the list because I looked at all of these. This one really, I guess, I didn't know what this company was, and then something looked like it was wood products. I don't know if it competes with Trex, but what a beautiful move here. And this is what you want to see, a big break on, of course, earnings. Oops, 22. I got somewhere in there is earnings. Let's spread it out. There's the earnings guy. Interesting. Well, its surprise was positive. So actual is losing 2 cents. Projected was losing 11. So that shouldn't be an minus 81. That was a big positive surprise, and this stock broke out. Now, it's extended up here, but I love the picture here, the launch indicators moving up after the big gap day. So four dots, strong relative strength and OBV. This is one I don't understand. This is Carvana. Um, I thought used car prices were falling. I see car dealerships who have cars where 18 months ago they had no cars. But look at Carvana. You can't argue with the chart. You know what's underneath here? Earnings. Let's see if I can find it without spreading it. Projected to lose 77 cents, May 23. Wow. That's why the stock gapped up and had a close strong on Friday. So there are a lot of great looking stocks in this stock market right now. So these are some of the high relative strength leaders. If you're a fan of IBD 50, Market Smith, now called Market Surge, this is where I get a lot of the interesting stocks that I like from. Sprouts Farmers Market, we've been talking about that for some time, and it had a big move up here, and we suspect its earnings heading under there. Let's see. Beat by 12%, target to 40, target to 62. So here's a stock that had good earnings and gapped up, and the analysts don't like it. That might be important to know if I was willing to start chasing this. So that's some of the stocks that I'll be looking at on the high growth list. And then lastly, let's just pull up my combo list, which is a list of stocks that I build by downloading some scans from the internet, running my scans in various platforms, and getting the best stocks and putting them all in one list. I call that the combo leaders list. So Apple, we know, had earnings come out. They had great earnings, and you'll see right here. Now, it's a 2% beat isn't what I think drove the stock. I think there was a lot of people on Wall Street that were expecting it to do poorly, and one of the reasons they expected it to do poorly was because of falling revenues. And if I remember what I heard, I think they did okay on the revenue, or it wasn't as bad as expected. And think about earnings. I'm just going to give a little, not advertisement, but just a thought. To win in earnings, you have to beat projected earnings, projected revenue. You have to give good earnings and revenue going forward. You are so rude. I'm not having lunch. I'm not eating. So it takes a lot to win. Arcosa, I don't know this stock from Adam, and that's not a reason to buy it or sell it. I think we looked at this before, but what a great move. Basing at the 200, earnings came out and they beat by 40%. We had a big breakout. That's a fresh one that looks like it could go much higher. So there's a lot of stocks here that look interesting. I've showed you some of my favorite ones. Let me just flip over to my buy list. Let me see if there's anything here before I move over. They'll be on my buy list as well. SPX Technologies. Again, this is the joy of earnings. You got stocks that beat by 20% here at a time frame when the market looks like it wants to break higher. So SPXC is another one that made it to my list. So I've gone a long time and I am supposedly on vacation and the natives are getting restless. So let's look at my buy watch list and see if there's anything that made it that I wanted to show you. I mentioned Beyond. Again, this is not a growth stock for a long time, but something is going on here, and it's had a nice little move here. Look at the relative strength and the volume coming in. It's certainly not extended. I'd expect it to stumble at that 200. But with earnings coming, I wonder if it's not telegraphing that something's happening with earnings. First Solar. I showed you earlier that solar stocks were one of the best groups on Friday. This is my favorite solar stock. It's got great earnings growth. I love it when earnings growth exceeds its its multiple. And on Friday, of course, we know earnings are out. It beat by 10%. Had a big move up on Friday with a wealth signal. Lowers to 356. The stock is 191. 240, 252, 271, 211, 209, 248, and 268. I don't think there's any surprise when all the Wall Street analysts are upgrading and raising targets that are at the minimum 30, 40 higher, so at least 20, 25% after good earnings. My First Solar looks attractive. Relative strength OBV is good. It's not extended. I'm going to end it here. I hope you have a great week. Um, I often talk about sitting on my hands. And as much as I found stocks I like, I got to see us break above those 50s. If we fail at the 50s, I probably am going to be very careful to the long side. If we break above the 50, I'm going to start getting antsy and want to buy. And when we retrace to the 50 and hold, I'm going to spend a lot of the cash that I've built up on the side. But there's a lot of ifs there. Are we going to break above the 50? Are we going to hold? And if we do, then I'm going to get very interested. If we fail at the 50, retrace and fail again, I've got to be thinking about adding to the short side. Be careful this week. Those Fed heads are not going to be our friends, is my fear. And we'll talk to you next weekend. And thanks for joining.